All right, to summarize, the challenge, 1, it's good to have a charter. Number 2, the big bank offerings are really good. The big banks got a lot of money. The third one, U.S. consumers. We're incredibly picky, and we haven't been great at adopting fintech. So challenges facing the challenger banks. But let's start with what I mean by a challenger bank. So let's get some basic taxonomy here. By a challenger bank, what we refer to at 11FS are companies that have actually come in, for the most part, build out their own offering. In some cases, they don't own a banking charter, and in some cases, they do. In some cases, they own the entire stack, so everywhere from the actual digital core all the way up. And in other cases, they use technology solution providers that exist in market. So what I find interesting about the US is we're seeing a wave of challenger banks come into the US now. So for example, from the UK, we've got Monzo, which if you haven't heard of Monzo, then you've never talked to anybody at 11FS. From Europe, you've got N26 that's coming in. So Monzo has now a headquarters, I believe, in LA. N26 is looking at an office and has one set up in New York. So they're coming over to look to acquire US customers. Then you have US challenger banks. A great example of this would be Chime. Chime based out of San Francisco, which has done a tremendous job of acquiring customers. They've, I think, about 5.6 million, I believe, is the last that they said. Now we can argue all day whether Chime is a challenger bank or a challenger front end, because Chime does not hold a banking license. Then you have Moneyline, which is based out of New York, which has also done an excellent job of acquiring customers. I do believe they're north of 5 million now. So what are the challenges, though, that are facing these challenger banks, whether or not they're coming over from the UK and Europe, or whether they're homegrown? Well, there's 3 main challenges. The first one is getting a charter, a banking license in the US is hard. It's not easy. So let me give you an example of this. From 2000 to 2008, to the market crash that took place, there was roughly 1,200 banking charters granted. From 2009 to 2018, there were 43. And of those 43, 24 were granted in 2009. So in other words, it is hard to get a charter. And by the way, if you don't have the charter, you're not holding deposits. For you to make money, that's tough if you're not holding the deposits, or if you're able to do lending. The second challenge that you face, the big banks in the US, their digital offerings, they're actually really, really good. And consumers will tell you this. So why would you go to a challenger bank when what you're seeing works well? And by the big banks in the US, we're really talking about the big 4. So Citi, Wells, Bank of America, their offerings and what Chase offers, they're really good, to be honest. Chase will tell you that 50% of Americans has some sort of account with them. Think about that market domination and the offerings that they give. So that's what you're facing when you come here. The third challenge, U.S. consumers. In all honesty, 40% of us don't have a passport. We don't go cross-border. That idea of having fees waived doesn't mean much to us. And again, we're happy with who we bank with. So you're gonna have to overcome that challenge. In the US overall, at fintech adoption, we lag Asia, we lag Europe, we lag even Canada when it comes to that. All right, to summarize, the challenge, 1, it's good to have a charter. If you don't have the charter, your path to profitability is really tough. Number 2, the big bank offerings are really good. The big banks got a lot of money and they dominate the market here. The third one, US consumers. We're incredibly picky and we haven't been great at adopting fintech. So there you go. But is there a way forward? Here's the good news. Yes, Varo just proved that. So Varo Money, a US challenger bank, we've seen recent news. They just got FDIC approval when it comes to the deposit insurance, and that is a big deal. The FDIC in the US, you're looking at deposits that are guaranteed up to $250,000. They've gotten approval for that. They are, at the time we're recording this, are maybe a month or 2 away from meeting all the requirements to get their banking charter, which means Varo then can hold deposits. They can start doing lending, they can start doing credit cards. That's a massive victory for a bank that's only been founded just a few years ago. What I do find interesting about Varo, though, they're founded by a 20-year banker. So this is somebody who has industry experience, who's been down this path. So if you want to know what the path forward is, use Varo Money as the benchmark. What they'll tell you, took them 3 years. 3 long, arduous years to get this approval, and about $104 million. There's your path.